a.m. and you're listening to
Right, let's talk about the South African Investment Conference that starts today in Sandton. What's expected? What's going to come out of it? What do you know about it? What should we learn from all of that? My guest is Goolam Ballim, who's the chief economist at Standard Bank. Goolam, salam alaikum.
Alaikum salam, Ashraf. Thank you for having me.
Yeah, you see, we normally talk socializing about a whole lot of other issues, but we need to talk about the serious business of investments and money this time round, isn't it?
Oh, indeed, and topical today at the conference.
Absolutely. So let me put this to you first up. I mean, would you say that this conference for South Africa is in effect its World Cup for economic growth?
It's a critical feature to the extent that it represents a dialogue between the presidency and the private sector. The private sector accounts for about 80% of all investments in the economy. And in that respect, this dialogue is important, and the incentives that the president is able to provide, and I don't mean financial incentives, but incentives in terms of creating a better political climate, stabilizing the economy and society with respect to the rule of law, and a dialogue, a bilateral dialogue between the private sector and the president with regard that continue to bedevil investment in South Africa.
And do I take it that this dialogue between South Africa and government and business reflects on business from outside the country as opposed to business from inside the country, or have I got it wrong?
No, so I would argue that the attendees represent a multiplicity of groups. So certainly there is a large cavalry of South African investors, South African participants. Yes, there are international investors as well, but international investors to the extent that they would represent multinational firms with interest in South Africa. So in a sense, this conference does not distinguish between domestic investors or investors with local domicile and those that are international. Investment, at least the outreach, is aimed at luring whoever has an interest in pursuing an opportunity in South Africa, and bearing in mind that investment in South Africa has fallen to around 16% of GDP. Now, just to explain that and give context, it basically says that only 16 cents of every 1 rand spent to South Africa flows to investment. The rule of thumb is that that needs to be at least 25 cents in the rand, or 25 cents in terms of investment to GDP, to just maintain your investment stock. So clearly we're below that, and we have been falling now for more than a decade in terms of this persistent decline in the investment ratio.
And let's stay with that part from the 25% or to the rand, or 25 to the rand down to 16. The fact that it's been this downward slide, what impact does that have, on the country? What impact does it have on the citizens of South Africa?
So investment is the lifeblood of growth. And if you have shallow investment, you will have shallow growth. If you have high investment, you certainly will have high growth. And the evidence is clear. So investment has been falling as a ratio of GDP, as we've just said. And if you look at our trend or steady state rate of economic growth, that too has been falling. Many South Africans of perhaps slightly older vintage will remember, in the early 2000s, the economy was growing at times at 5% per year routinely. And at that time, investment was between 25 and 27% of GDP. And since then, investments plummeted, and so too has our trend rate of GDP, so much so that GDP today is growing at a steady state of 1%. So there's a very strong lock between investment and GDP growth rates. They are, two sides of the same coin.
So with that in mind, then, what are the expectations from the conference in terms of how much, in rand terms, is the South African government or the presidency hoping to attract?
For sure, I worry sometimes that this conference is more a case of fiddling. In other words, it's a dialogue between a few firms and the presidency, and showcasing investment at a very narrow multinational or local champions level. There are bigger picture issues, and clearly, for example, rule of law. within a broad umbrella is relevant. And when I say rule of law, we talk about corruption, just personal risk, the general sense of being able to do commerce that is uncorruptible and does not is not bedeviled by the risk of mislaying funds and so forth. Those are issues that we need to grapple with. That the ANC-led government appears to strike a lot where, for instance, the private sector is accused of not investing. But investing really is a consequence of an attractive climate. And an attractive climate is significantly shaped by the public sector, by government. And unfortunately, the investment climate has been tainted by concerns surrounding political stability. And in political stability, there's concerns about the viability of state-owned entities. The second significant concern is that there's just not sufficient aggregate demand in South Africa's economy. And in a sense, it's a chicken and egg. You get aggregate demand when you have confidence, you have confidence when you have investment, and you get investment, you get demand. So in a sense, the sort of weak levels of aggregate demand, and especially where it's confined to middle income and high income consumers, is not robust, and therefore also taints the investment thesis. And the last item I'll quickly mention is interest rates. Interest rates have risen. They've risen everywhere, but interest rates are a very critical feature. They speak to the cost of capital. They potentially suppress demand as well. So interest rates have risen quite a bit over the last year. And those three things are probably the top-ranked survey items in terms of investors' concerns.
So having said that, I mean, the actual target of like 1.2 trillion rands over 5 years being touted about at today's conference, do I take it that you're going to disregard that as a factor?
So in nominal terms, in fact, I think the president will achieve his target more or less. But 1.3 trillion rand, 1.2 trillion rand, depending on, remember, it was a dollar-denominated suggestion, and so the exchange rate toys with it. But in any event, broadly speaking, the president will achieve that target. However, as I've highlighted to you at the beginning, looking at the macro picture and the data that I illustrated earlier, we're aiming weak. We're aiming to play in the second division with the type of figures, and then we celebrate perhaps being log leaders in the second division, which I think is certainly inadequate.
And it's interesting you bring that up, because you may know that I drive a project called Champion South Africa, and we actually want to be this champion nation. We're very much in the relegation zone, but maybe you're saying second division, so that's already happened. Which gets me just to make this comparison, right? If you're talking about economic stability and good governance and inspirational leadership as a driver of attracting in global investors to a country, then do I take it that the trajectory at this point in time is at its lowest, coming off the back of Zuma Ramaphosa administrations, right? And should it have been at its highest with Mandela, even more than Mbeki? I mean, did we see that?
So I like the fact that you're taking through the arc of our politics, and the Mandela era, I should say Mr. Mandela, combined with the former President Thabo Mbeki era. The data is clear in the sense that they do represent episodes where confidence was certainly superior to what it is now, and the level of investment to GDP and the trend of growth was certainly superior. As I highlighted, South Africa enjoyed a golden age in the roughly 2002 to 2007 period, where growth was incredibly lively. We were creating 400,000 jobs a year. The stock market rose fivefold between 2002 and 2007. But that appears to have been all too fleeting. And I know I just don't want to be a polemic against the former President Jacob Zuma, but the impunity that era gave in terms of breaching governance certainly has compromised South Africa. And the results are there to see now: growth rate, our swelling levels of poverty, widening inequality, and just a general sense of social alarm.
Yeah. So, I mean, I take it, therefore, the problems bedeviling South Africa are well documented. I don't have to repeat any of them right now. Everybody knows what they are, right? Perhaps the big issue here, I take it, and you've alluded to that makes this country right now, for an investor who's not romantic about countries, who looks at return on investment, this is a far less appealing investment than to put their money elsewhere. And if it's elsewhere, then where would they put it? In which league is South Africa playing? Who are our competitors?
Right. So I feel valuation is a very critical conversation or element within the conversation. Valuation refers to the value you place on an asset, whether it's a listed stock or an unlisted company. And in terms of valuation, many would say South African is cheap. In other words, you can buy a company that is generating good earnings cheaper than an identical company in another jurisdiction. So on valuation, South Africa would signal that it is a screaming buy. Assets are cheap. But now, why are assets cheap? Sometimes they're cheap because people see them as cheap temporarily and don't believe that the medium to long-term prognosis is promising. In other words, today's cheap will remain cheap because in due course, that asset will cease to generate the type of returns that it is maybe promising now. So in other words, the price is cheap, but the prospects are poor. And this is where South Africa sits. Investors are saying, your valuation is cheap, but we're concerned about political stability. We're concerned about governance. And there's an election next year. We don't know what type of government is going to be formed out of coalitions. Coalitions have thus far not shown any level of maturity. They're more destructive. They're self-interested. And so, yes, your assets are cheap, but then they are peer countries. So who are the peers within the emerging world? We compare sometimes to Brazil, Turkey, and some Eastern European nations. And if we take Brazil for a moment, as you and I talk, current President Lula, former president at one time, is on a very imaginative economic diplomacy trip to Beijing. He's flown out with 200 business people at least to try and bolster Brazil's Sino ties. He did that when he was president in his first instance with Africa, boosting Africa-Brazilian ties. And it was very powerful. We lack that level of leadership, quite clearly.
Yeah, I was tempted to ask, it's fine to have a conference in Sandton, convenient for you and I to attend, but practically it may well be better if the president and his entourage probably does a series of whistle-stop trips around maybe 5 key territories around the world, isn't it?
So both are relevant, of course, a local dialogue on local soil, as well as international outreach. But ultimately, it's going to be a reform process. We need to interject a deep sense of accountability into institutional structures and society. We need to, obviously, repair the electricity infrastructure incredibly rapidly, because that's costing us between 1.5% and 2% of foregone GDP growth. Transnet, water, these utility network industry items require very urgent repair. And we all know that. So in a sense, as you highlighted, we can see in clear and plain sight where the fissures are, and government is either unwilling, indifferent, or incapacitated.
Well, just to wrap up, and I know you need to go. The point that you made about cheaper investments but risks are pretty obvious to me. And I'm looking at the example of buying two types of motor cars, one at a higher value and the one at a lower value, but the lower value doesn't have a motor plan, and that's the type of element of risk one is to consider even in a country, right? Which brings me then onto this last point, right? Let's talk about the issue of energy, right, and energy security, right, which we know all about the problems we're having right now. Would that paradoxically, the problems of energy security, would that paradoxically open up the space for South Africa's biggest investment into that space?
Indeed. So stabilizing South Africa is an investment opportunity. Investing in power and energy clearly is a growth vector. And we're already beginning to see that provide thrust to the economy in certain areas. So yes, picking up the pieces, so to speak, rebuilding the country is an investment element. It will provide that level of trust and spillover effects as well. So as you rightly highlight, it is a growth vector. However, that investment in energy will require a return. So there still needs to be a medium to long-term political and economic prognosis that is enticing. All of the investment that could go into South Africa could come to naught if for some reason South Africa continues to degrade, growth remains weak, demand remains weak, and servicing the debt for that investment, the return on that investment could prove difficult to satisfy. So you
Yeah.
need a combination of elements.
But perhaps the last thing, just to ask you before I let you go, you made the point about the upcoming election and the current state of coalitions at local government level. There's an expectation, and it's very realistic expectation, that 2024 will see South Africa's first ever coalition government. It could still be ANC led, but it may not be, right? How much will that weigh on an investor to look at the possibilities that things will be very, very different to what they are now? And although some may say that creates more stability, that investor may think, well, this is even more unstable for this country. So I'm just going to hold back and let's see how they play out, trying to work out their coalition agreements.
So you're correct in the sense that it is a significant item on the investment formula. And coalitions, as you have suggested, first time at national level prospectively, that could be very problematic depending on the combinations of coalitions. So, for example, and I'll just speak through the lens of investors, they're alarmed at perhaps more sway for the EFF. They think the EFF is ethically compromised. They think the EFF will not act in the citizens' interest. Many look at what has transpired in Johannesburg as an indication of just the clumsiness and the compromise to civilian society. Many of the opinion, one way or the other, that Ramaphosa, Mr. President Ramaphosa, could still be the man for the reform agenda. And if the ANC were to fall below, slightly below 50% and require a small coalition, that could be the best of the worst outcomes that could come to fruition. But if the ANC continues to fall into the arms of the EFF and vice versa, I think many investors, rightly or wrongly, they don't judge that as a seductive outcome.
Okay, well, lots to reflect on. I appreciate you giving off your time, Goolam Ballim, and I gather that you're going to give some input at the conference as well. So looking forward to seeing what comes out of that, whether those numbers really matter. Thanks for your time. We'll chat soon, inshallah.
Take care. Amin. Assalamu alaikum.
And there we are, Goolam Ballim, the chief economist at Standard Bank. I'll tell you what, as a South African, it's funny when we talk about other things, we pay a lot of attention to that. I would strongly suggest you listen to this interview that we just had, conversation, and re-listen to it and share that, because think about the things that came out. They are that important. Perhaps what's also that important is how do you fire up, as in power up a mosque in Soweto. Well, that's happening, and there's a fascinating story behind that, which we'll cover right after this.